Hi everybody, Boris Schlossberg. Welcome to the trade setup for 116.13. As always, past performance not indicative of future results. Trading forex carries a high level of risk, may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists you could sustain a loss some or all your initial investment. You should be aware of all risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information contained here is strictly for your own personal information, and opinions presented do not take into account any individual investment objectives, financial situation, or needs. And you should obtain advice based on your own individual situation before making any trade decision or decision of how do you want to trade on leverage. We're not responsible for any losses incurred on investments made by readers and clients as a result of any information contained here, and we do not render legal, tax, or other professional advice. If investment, legal, tax, or other professional advice is required, services of a competent professional should be sought. All right, big story today, I would say, in the FX market is obviously the continued liquidation in the euro dollar that started off of yesterday, off of comments by Juncker yesterday. Juncker basically said that the level of the euro was dangerously high, and if you look back on daily charts, we're obviously very much near yearly lows. Juncker's comments basically took the kneecaps out of the euro, took us through the 33 handle, which put a very negative bias, basically a mildly negative bias on the euro for the time being, because we failed at the 34 handle right here. So break of the 33 still puts a lot of pressure underneath here until and unless we kind of recover the 33, and more importantly, until and unless we recover the 34 handle, the bias still remains relatively negative. Now the lows here, which were set in the aftermath of the Juncker comments, which is 33.65, still have not been broken. So that's sort of a little bit of a upside hope for the bulls. If the lows get broken here to the downside, and it really opens up a run all the way down to the 32 area, and that's going to be a critical thing. The other impact, of course, was the fact that the euro got heavily sold on euro yen flows. Euro yen in the Asian session overnight pretty much broke the 18 handle and then broke the 17 handle, and now still struggling with the 17 handle as we're watching. And the reason of that is, of course, we have continued liquidation out of dollar yen. Dollar yen has been in essentially a serious turn. If you look at dollar yen here, let me just go back a little bit on the hourly charts. The most telling thing about dollar yen was this failure at the recent swing highs around 89.50. Basically, we tested it here, one top, double top, and since then it's been essentially a liquidation point. Now 88 holds in dollar yen, the same way 117 holds in euro yen. These are critical levels. We start breaking those levels into the European session on further profit taking, further liquidation, then it really opens up a way, at least for 87.50 as the next level of support, but really the full 87. 87 was that area that we tested a couple days earlier that faked out a lot of the shorts. Everybody got short here, then got stopped out at 88. They may open up a way all the way down towards an 87 distribution. So have to be watching this very carefully. I think the lows of the day today so far were 87.95. We'll see how the European session trades, more importantly how the US session trades. But if you have further profit-taking liquidation in dollar yen as people kind of bail out of these longer-term positions, then you have obviously further downside across euro yen, which will probably drag euro down all the way to the lows as well. So 32.50 is a near-term target for the shorts on the euro dollar, 87.50 on the dollar yen, and 16.50 on the euro yen as the downside targets for the night. Euro Swiss is finally starting to give back a lot of this massive rally. Yesterday, obviously, we had this squeeze all the way up to 124. And it's very natural that given this kind of a huge squeeze, that at this point we're starting to see a little bit of relief. And now the 23.50 level comes into view. Distribution back here, break through the 23.50, opens up a way, obviously, for a retest of 2300, which I think would be a natural retest given the huge amount of overhead squeeze that we had here. One of the reasons why Euro Swiss, I'm going to go back on the weeklies actually just to show you why Euro Swiss is having such a hard time. It's because this 125 area, this is 125, is really long-term resistance. You see, this is weekly resistance. 1, 2, 3, 4, 5, about 10 to 12 weeks worth of resistance around the 25 handle, which makes sense as to why it would run out of gas a little bit at this level. So a correction down to 2300 1600. Very reasonable given the kind of massive move we've had up. But longer term is by no means out of the question. And a retake of the 2400, if we retake the highs of 2410, very bullish for the pair, and suggests that a march towards 2500 is what's in the offer for the next in the next month or so, depending on how the trade goes on. Now, cable is much more boring in many ways. It's just not doing much. Let me just go. Sorry, let me go to the 30-minute chart, near-term chart. Very little price action. You see the kind of one of the interesting things about cable though is that for the last 2 days, the 60-30 level has just held. We have not been able to break the 60-30 level. So it's interesting because it looks like a break of the 60-30 could open a way towards liquidation towards the 160-100 level, which is the very key support level that we've been operating on for a while. So to me, you see right here, a break of the 60-30 opens up the 160-100 level, which is the next level of support. That's going to be interesting to watch as the night progresses. So far, cable has just been in very, very small ranges, not doing much. Aussie trapped in this 105, 106 level, and this has been the level just for the longest time running, for basically several days going. Now, overnight positive news out of I think it was a Westpac confidence survey, kind of brought us up through the towards the 80s, but then risk aversion, a little bit of selling on the yen crosses brought everything back down to 105.40, but still really not much price action. The only thing that's kind of interesting for the bulls is that this 105.20 also starting to hold, and obviously right now in the European session, the 105.40 starting to hold. If we can maintain higher lows, possibility that we could have a break to the upside. 105.80 obviously is the key break. This breaks up to the upside, we may be able to challenge the 106 on the upside. That's a very, very key long-term level that's been acting as a serious resistance. As a result, if we start running towards the 106, the Euro Aussie, which is obviously been under pressure lately, and broke the 26. We ran up on a squeeze towards the 12700. Yesterday started to distribute a little bit, broke the 126 on the Junker news, have been sort of consolidating around here, and that's going to be a really interesting view here, because if the euro sees further weakness, 125.50, 125, which is a really big support here, comes into view on essentially further euro weakness. Euro starts to get short covered and we start moving over to 33.50. Then of course this starts to get reversed back out. So 2600, which was support, now starting to act a little bit as a resistance, but a move through the lows over here, which I believe is around 25.85, a break of around 25. No, I'm sorry, the lows here is 65, 25.65. Break of those lows opens up a move towards 25.50 and possibly further distribution all the way down to 125.00. So for the time being, the takeaway on the euro, pressure to the downside, very little on the event risk. Let me see. I'm sorry, I don't think I even pulled up the calendar. Let me pull up. Here's the calendar, and let me just minimize it a little bit so I can show you. But basically, the calendar doesn't carry much. We have German CPI, we have ticks, we have the German bond auction. None of this is really expected to be market moving. The only thing that could be of interest is the housing data out of the U.S. Market looking for a little bit of a better run at around 48 versus 47, and Beige Book later on in the day. Beige Book be interesting at 2 o'clock New York time, mainly because if the Beige Book signals that there is some slowdown going on in the U.S. economy because of the concerns over the fiscal cliff, that could even spur more risk liquidation, push euro yen even further. But for now, the drivers in the currency market are really primarily based upon technical issues of profit taking and key levels, and those levels very much stay in place unless we get some exogenous news that could affect the market. That's pretty much how we shape up. I wish you guys the best of luck and the best of trading. We'll see you tomorrow at bkforex.com.